NVA on the TSX. All right. NVA, who are you? It doesn't matter. Probably not. But let's check it out. Who are you? NVA, Nuvista Energy Ltd. Let's drill this, guys. This is another stock picked up from stageanalysis.net's US stocks scanners. And I just love going through them. Mostly targeting Canadian stocks. But it could be anything in there. The screener picks up. It's worth a look at it. And what I see right now, what my magic crystal ball tells me. All right. Here is, I like identifying support, resistance and support of a bigger pattern. Start from the out and then go in. Way easier that way. You start in and then start looking out. You'll get a whoo. It'll give you a vertigo. And you'll try to make fit the higher trend to fit what you found the small trend. And that is just a recipe for landing on emotional landmines. So that is another technique, if you will, for emotion management. Always start from the higher trend, going down. Sometimes I forget. Go on the weekly, especially when I started revisiting Stan Weinstein's framework. Weekly. And then, we have to go check if the monthly, the higher prevailing trend is in accord. And then after that, your bias, and you want to make it fit. So start by doing any framework on a higher trend and then go down. I'm applying my regular classic chart trading framework. It was already based on monthly candle breakouts and breakdowns using a simple horizontal resistance and support. Super straightforward. And I'm just reapplying that. So I'm kind of combining my framework with Stan Weinstein's framework. And more than that, Stan Weinstein's framework adapted, because I'm not using the Mansfield, I'm using the RSI. I added, based on ISA Trader's recommendation, the Ichimoku cloud to better identify nearby resistance and support. So that's why everybody has their own framework, right? Custom tuned over the years to your preferences, and it's your prerogative if you want to change it, adapt it. There's nothing set in stone. This is it's not a one-stop shop there to trading there. It's the diversity of it. That's what's actually really nice and long-lasting for trading. You could stick with what you know and not change, or you could adapt stuff over time. It's up to you. All right, NVA. So here I have $9. If I have a candle close above that, I have a monthly candle breakout. And for the breakdown, the ultimate breakdown would be below 4. But remember, there's patterns and then there's intermediate patterns. And right now the intermediate pattern is this top formation here, which could possibly be tracing out, and that would have given me a target back to these previous lows right here. We're not there yet. Right now we're looking at this as a stage 1, maybe consolidation, and moving on to stage 2. But we're going to confirm that when we go down on the weekly and try to apply Stan's framework. Right now I just want to identify my breakout levels. And they're right here. $9 level for the ultimate breakout. See, if I'd be playing this on my monthly candle chart, I'd have one huge target here. And then I could have another target here. And the more probable targets are the closest ones to the breakout. And this is one thing like I've observed and adapted my framework over the years is I call that target consideration. Sometimes you get greedy and you see these huge targets. Look at that nice bottom, but all right, put the target on top, but then apply target considerations. Does it run past important resistance? Yes. Go back to your chart. Go check. Are you really applying? It doesn't mean it's not going to reach or it's not a valid target, but you're going to hit some congestion along the way here. If you're on a more probable target, then you could go back and look if there's intermediate patterns that are giving you closer targets. This one here, right here. So this is perfect right under that resistance here. Those wicks, which was intra noise on the weekly and daily, but the monthly whoosh, sucked it back in to have its more meaningful definition of resistance at the 12 level. So this would be probably the target I would play, the less greedy target, the more probable target of reaching its target rather than this further away one. All right. Okay. That was my little recap. I do it for myself. You guys listen to it and try to practice it, apply it good. The more you say it, the more you absorb it. The more you see it, the more you absorb it. And after that, it's just anchored into you. And the day that you might land an emotional landmine, you come back to that cemented framework in your head that's just not floating around. And you have less chance of deviating away from it. All right. So the $9 level is for that bigger pattern. The 870 level is probably what we're going to notice on the 5-year weekly, this pattern right here with the breakout at the 870 level. There's multiple levels, resistance, and with no further ado, let's go on Stan Weinstein 5-year. Whoa! What do I have here? Top, stage 3, breakdown, stage 4. Nice bottom here. Stage 1, breakout. Didn't last very long. Stage 2, back to stage 3, and continuation to a stage 2. So this is right now what am I looking at? Let me zoom. Okay. For Stan, we need to identify the easiest thing is to identify let's remove all trend lines. A breakout line. On the weekly, it'd be all the way here. The moving average has to be going upwards. We need twice the average volume of the previous 4 to 5 weeks, a little bit like this one here, this candle. But for the candle that's going to break out above that horizontal breakout line. And we need, the Mansfield indicator, which compares the stock's performance relative to the index it's in. But right now I just have the RSI, so it's the stock's performance compared to itself. And what I like to see is like this, going over halfway point, going upwards. And that gives me my triple confirmation. And then there's a quadruple confirmation with the Ichimoku cloud. If there's no red cloud on top, no overhead resistance, you're full steam ahead. And then the synctuple confirmation, that's the one we just did before, is the monthly candle chart. And if you have a monthly candle close above its breakout line at the above the 9 level, then full steam ahead. So that's pretty much, if you want to do it really fast, doesn't take much time. Sometimes I go off, I talk about risk or money management and emotion management. I'm trying to really deep dive into that. Try to observe and help myself by defining techniques and stuff, routines that you could go through to make sure that you're taking care of that emotion. Because most time the biggest problem is emotion management. The one people least work, the easiest ones to learn is the risk and money, and then that's just math, right, and applying it. But the way you apply it through emotion, I'm going to cheat on the risk to reward. I'm going to put my sell stop a little closer so I get a bigger, lesser risk, higher position size. I'll use those crazy away targets, and then that's huge reward, right? That's traps that I fell into, and probably other people are falling into, because I haven't practiced emotion management. And you have to realize it, that you're doing these emotional decisions. Like, just by the way somebody converses about stocks, like, oh, I have a 10 bagger. Remember those days? Who says that? Somebody tells me I did a 10 bagger. It's like, my first reflex is, well, 10 bagger of what? Of your NAV? So let's say you had 100K, you're up at $1 million. Or it's a 10 bagger of your position size. So let's say you bought for 10,000 of the stock, then you're at 100,000. Is that what a 10 bagger means? So or is it the risk? Is it they risk 1,000 on the stock, and then the stock, they had 10-to-1 ratio, and they hit their target, and then they made 10 times the risk? I'm pretty sure it's the one right before that. They bought $10,000 in the stock, and then the stock went up to 100,000, and then they made 10 times their money. But that's just not. After that, you could say, well, that initial position, how much was it from your NAV? Was it 50%? And then I'd say, you're just crazy, right? And always think of NAV like your adjusted value. So let's say it's always like based on $1,000, and then how much is your 1,000 worth at the end of the month? 1,100, and then after that, that's what you compare. Like always, net adjusted value. I think I is index. Always bring it back to that, and that's a comparable metric you could use. Not I did a 10 bagger or I quadrupled. That's emotion. That's emotionally defined. And the more you use those words, the more you're promoting, encouraging that emotion, and your trades. It's just hazardous. You got to eliminate all that, and just do your framework. And once in a while, you could go look and on your charting software, you're probably going to see if they're good. There, you'll have end of year reports or monthly reports, and then you'll have your Sharpe ratio, all the other ratios associated to trading. You'll have your NAV, and in percentage wise, you'll have your growth of your NAV, and in percentage wise, that's all that counts. The amount, I don't really care. It's all about percentages. That's a conversation I could have. Somebody who talks that language. But if you're telling me to 10 bagger, yes. All right, guys. Okay, so that's already done for this. NVA, watch the $10, $9. If you have a breakout above that, stage 2, baby. All right. See ya.